And so we're going to look at consolidated ed because it looks like it's got our basic general parameters of being a good stock. So now we're going to go pick price. The way we do that is we're going to go to bigcharts.com and find ourselves what price point we think we should buy this at. One of the things that you can do is to obtain the handout from me that shows all the websites, and on that website it has a setup for bigcharts.com, so that if you just click on that, it will automatically put in all the parameters and everything, so you don't have to go in and set up all of these charting setups like we're getting ready to do. But if you don't have that, then you'll have to go through the following process in order to set up your bigcharts.com so you can use it. So here we go to bigcharts.com, but if you type in bigcharts.com, it'll actually take you to bigcharts.marketwatch.com, which is the same thing. And there you're going to have an empty blank, and you're going to put in that empty blank ed. And so once you put ed into that empty blank, then you click on Advanced Chart. Advanced Chart, it doesn't really have the proper setup for you yet. All it shows is ed, the time is 1 year, and the frequency is daily. You still have to go in and set up your indicators, chart style, and so on and so forth. So what you have to do, go in and you set it up for, you've already got ed and 1 year and daily, but you now have to go in to the upper indicators and put Bollinger Band, lower indicator 1, MACD, lower indicator 2, Williams %R, and I always put in the volume plus, but you don't really need that, but it's nice to have. You then also say that you want a large or a medium-sized chart. I usually use large, and then you save that. One of the other things you do before you save it is you also set it up to price display for candlestick. That's just a way of representing the price. So once you've done all of these things, then you hit save, and actually once you do all these things, you hit draw chart and then you hit save, and it'll save that for you. Or you can just use the handout that I give you that comes to you over the internet on an Excel spreadsheet, and you can click on it. It does all this, so you don't have to go through the process. Anyway, once you've set this, is a system that has 4 charts on it. You're going to have the top one being the Bollinger Band chart, the second one being the MACD chart, the third one being the Williams R % chart, and the fourth one is the Volume Plus chart. You're going to use the Bollinger Band, MACD, and Williams R % to be your indicators, so when they indicate the right things, they're going to tell you when it may be time to buy. So I'm not going to get into what each of these actually does and how it works, but I'll tell you how you can use them to pick a price. Let's start with the Bollinger Band. The rule of thumb on the Bollinger Band is that once it's gone out, the price has gone out the top end of the Bollinger Band and then come back down to the bottom end of the Bollinger Band and then gone out of the bottom end of the Bollinger Band and then taken a right and come back in, that it's basically may have hit its bottom price, and it may be an indicator to buy. MACD, basically the way I use it is I look at the zero line where you've got stuff above and below a line, and I look at the zero line, and if the MACD is below the zero line and the blue is coming back up and getting ready to cross up above the red, that may be an indicator that it's time to buy. And then the Williams R percentile, it basically is set up to where if the line is coming from the bottom of the chart and heading up and about to hit the 50% percentile range, then that's an indicator to buy. And basically all I'm doing is when all 3 of these indicators are lined up and they basically are getting near what I call the pattern, they're in the pattern that I expect them to be in, then I may be ready to buy that stock. And so here you can see that probably the best time, what I would have probably done here is I would have been buying in this vicinity, and I would have probably been trying to buy it around $53.50. I'll blow these charts up in a minute so you can see that a little bit better, but I mean, it gives you the idea that when they're all lined up, you can kind of maybe pick a price in there. So let's think in terms of maybe somewhere around $53.50, okay? But before you're going to say, one of the things I always do is look at price support for the last couple of years. Is this the lowest price it's been in the last couple of years? Has it been a lot lower than that? If this is pretty much one of the lower prices, you can feel pretty good about maybe jumping in on it. If it's close to the price supports that it's been in the past, say $54, that still makes you feel comfortable if you were buying in that range, because you're still buying near the lows. So I always kind of like to look at the lows for the last couple of years and see what I think. And again, this is showing the same information as on the previous screen, showing that the MACD is about to come up and cross, the blue line is about to cross over the red, and the Williams is crossing over the 50%. Larger picture of this, and here you can see where the Bollinger Band is down here at the bottom, and that the price has crossed below the bottom of the Bollinger Band, gone outside of it down below, and now taken a right turn and come back in. And you can see that the blue line is about to cross the red line, and that here actually the Williams R percentile has crossed the 50%. So you'd probably be looking in this time frame right here to be trying to buy, because you're getting really close to everything being where you want it to be. And so that would be around $53.50. You might buy it for $53.25. You might buy it for $53.75 in there during that day, if you can buy it during that day. So that's your price range. And so that's how you've done it. And you just kind of go from there and see if that works for you. And hopefully after this, it starts to make headway going back up. Generally, it works with these dividend stocks, because at some point in time, the dividend gets to be such a big dividend in terms of yield that people will buy it, and that automatically puts a floor under it. So there should be a floor under this at some point. And I think in the past you could see that from looking at the 2 years that we are just below that floor. So it should be a fairly safe place to buy. And that's pretty much the story.
That's all, folks.